Hey guys, welcome back to the channel itself. And today we're going to go through actually the portfolio itself. As usual, the usual agenda that we have on hand, go through some key market events. And I think I'm going to throw in something like the SPY. If you are doing a simple dollar cost averaging, what are the support areas that you would consider buying at or consider dollar cost averaging into the SPY? So if you don't know about dollar cost averaging, that is just basically putting in money, setting aside money to invest in the stock market, and in this case, the SPY, um, every so often. So this is what I call dynamic dollar cost averaging, where you identify support areas in the SPY, and then you purchase at those support levels as opposed to putting in monthly and buying at whatever price that it's currently at, right? And before we get started, I'm not getting much traction on this channel yet. I know it's a relatively new channel. So before we get started, do help me subscribe to the channel, like this video, and potentially share it to whoever you might feel would benefit from this video itself. And with that out of the way, let me just share my screen and let's get on with today's content. All right, so let's look at the SPY. So if I can pull out that chart over here, as we can see from the charts, it's very strong, right? We are making, we're going into higher highs in this stock market, and it's currently sitting at all-time highs. So let's look at the potential support areas that you can consider dollar cost averaging into if you would like to use that strategy, right? So the first area of support that I identify would be the $565 level, and that is a 2.2% drop from where we currently are. And the next level of support, it would be at around the $542 range. That's the next level of support. And also you can consider the $538 range. That would be the next level that I would consider dollar cost averaging in. And of course, after that, we have the other level at $524, and that would signify a 9.3% drop. And the last level would, or I think this is pretty unlikely, but if we get a correction, which is defined by 10% or more drop, that would bring us to a $511, and that would be where I would be trying to gather up more cash and putting more cash into the SPY if it ever drops to that level. And if you don't know, a correction is defined as 10% or more drop in the SPY from the all-time highs. And a bear market would be a 20% or more, right? So that is the technical definition if you're unsure about that. With that being said, though, I do have to caution that currently the market or the SPY is overvalued, right? The US markets in general, I think they are slightly overvalued. Okay, so if we look at the PE ratio of the US markets in general, um, averagely we are at around the 20, 20 range or 22 range, right? And we're currently sitting at the 29.23 range, right? So that is pretty overvalued in my opinion, and that's why I did not do a option play or sell options on the SPY. Although it is a very safe bet, but I chose not to because I felt the SPY is currently slightly overvalued. But of course, you would have known by now that there are two stocks which I feel is undervalued as of now, and we're going to go through those two stocks, right? So this is purely from the income generating portfolio perspective. I do have another portfolio that is more focused on capital gains, where I do have other stocks and I trade them using some synthetic collar options and so on and so forth. And I might explain to you how that works when I see a possible entry point for that sort of event. For this portfolio, mainly is the selling of puts, and I might consider synthetic calls if the situation looks good, right? Then I might look into entering synthetic call. So of course, by now you would have known the two stocks that I like and I feel are undervalued as of now are Amazon and Google, right? So Amazon, the valuation lies at around the $230 range and $260 for me. So this is the range that I have defined that the valuation lies within. And if it goes to that range, that would be when I might consider stop selling put options on it, right? So that range would be a little bit too high or too rich valuation for my liking. Then I will look at other stocks if there are in the market, right? Okay, so we are pretty far off. So if I do a measured move over here from today's price, which is at 185, and if I bring it up to that range, it's about a 30% potential upside from here on out. So I will continue selling put options on Amazon until it reaches that range, and then I have to reassess, right? As to whether potentially I want to continue selling puts. And if I get assigned any shares, so if you recall for the beginners out there, to put in perspective, if I get assigned shares, then that means that I have to buy Amazon at the strike price of my put, which I will go through more in detail later. And for Google itself, the valuation is at $211, and from today's current price, a measured move up would also be about the 30% undervalued range. So as per Amazon, as the same strategy, we're going to continue selling puts on this too. After the current position has expired, I'm going to reevaluate and then sell put again. Okay, so the next thing on the agenda is going through the income generation portfolio tracker itself. So as you can see, we started off with 50K 10 days ago, and currently we're sitting at $51,500 to be more specific over here. And we still have these two positions on hand. All right, so Google and Amazon, Google $155 sell put, and Amazon itself, $175 sell put, which is expiring on the 15th of November, and then we can collect our cash in whole. So if you can see here, capital is 50K. This is a bit repetitive, but we are currently sitting at $51,537.20. So that translates to a 3% in 10 days. So we're off to a good start in this portfolio, but until the 15th of November, anything can happen in that period, and we will reassess at 15th of November. That is the day where our options expire, right? So if we go to my interactive brokers, as you can see, the live account is sitting at this valuation. The two portfolio positions are these two. If I can pull up. Right. Okay, over here. Right. So for Amazon position, we have an unrealized profit of 69, right? If you are a Tesla shareholder, that numbers mean something to you, but we're gonna keep it as that. Google, we're currently sitting at a negative unrealized profit or unrealized loss as of now, so negative $14.92. And our IBKR, which is shares that has been given to us, Right. So this one I can consider this entire market value as profit because that's the bonus that I get for signing up with IBKR. So that sits at a $420 profit, right? But of course, that's not attributed to our performance. It's purely just a bonus that's been given to us. Okay, so with that out of the way, that is the portfolio as of today. And there are some key events that is going to come out today, which you have to take note of. So later on today, there will be this. Let me see over here. Correct. So I have it open over here. So this is the CPI or core consumer pricing index. So this basically tracks how much are consumers actually paying for their, their goods and services and so on. So the increase in this price is previously 2.5% for year over year. So that means that your eggs, your meat, your hair salon price had on a year on year as compared to last year, it has gone up by 2.5%. And the forecasted for today's release is downwards to 2.3%. So if we actually get a 2.3%, that is pretty good for the markets. That means that inflation is coming down, and that might incentivize the Federal Reserve to continue to lower the interest rates, right? So keep your eye out on this. This will be happening pre-market. So of course, you will not be able to be doing any actionables on this data, but keep an eye out on this, and we'll see how this goes out. There's also a month over month, which was previously 0.2%. They are forecasting that for the month of September, it should come down to 0.1%, right? Okay, and the next one that is happening tomorrow would be the core PPI, right? So just now we have the consumer, and this is the purchasers, right? So this is more for businesses. So if you look at your companies like Apple, or if you look at your companies like Hershey's or Starbucks, the cost of their raw materials, are they going up, or are they? I mean, they're definitely going up, but are they going up at a heightened rate, or are they going up at a lessened rate? So for the previous month over month, we got 0.3%. That means their core materials go up by 0.3% month over month. And it's forecasted that in the month of September, it should be 0.2%, which, if it plays out as per the forecasted, that is good for the markets or the economy as a whole, right? That means that companies, they are able to not pay so much for their raw materials, and this translates to more higher profit margin for companies. And as a shareholder, you do want to see that their profit margins increase, and that translates to increase in valuation of stock prices for us. So that is the bottom line, right? That is what you want as a shareholder, which is that the stock price go up, stocks go up, right? So that is the two key events that you have to take note of, one today and another tomorrow, right? And some other things that I do want to show you over here. So this is basically the Federal Reserve Committee participants. It's a dot plot of their where they see the cutting of interest or federal funds rate, right? So they are looking that in 2025, they are looking to bring down the rate, federal funds rate to 4%. In 2026, it should come down to about 3%, and then in the longer run, it should go closer to that magic number of 2%. So that's where they're looking. If you didn't know, there will be two rate cuts today, or not rate cuts, not for sure, right? But there will be two announcements as to whether there will be any rate cuts. So in the previous video, we saw that the highest probability of chance at I think around 97% was that they will do a 0.25% rate cut in the next meeting. And there is a 3% chance that they might not cut that at all. And that is why we need to look at the events that are coming up today and tomorrow, right? So if the economy looks strong, then they might be more inclined to cut it, right? That means inflation, or basically that CPI and PPI basically has to do with inflation. If inflation is coming down, then it gives the Federal Reserve more confidence to cut rates. Okay. Okay, so basically this is the same thing that I've just explained, right? So what the inflation shows prices increase less, right? As we can see from the previous one, the forecasted is that prices will increase less. And then of course, Wall Street will predict that the federal funds rates will come down over then. Right, so I think that is about it. I've covered everything that I want to cover from this session of the video. So I hope you found that helpful. And if you found that helpful, once again, do note that the information shared here is time sensitive. Do help me give a like, do give me a subscribe, and click on the bell notification so that YouTube will send you alerts whenever I post a video, right? And with that being said, I hope you continue to do well in the markets, and let me know down in the comments how many of you actually followed my trades, right? All right, so I will see you on the next video.